European stocks extend their rally on a better-than-expected German business outlook in hopes of smaller rate hikes from the U.S. Fed. Wall Street, meanwhile, was shut on Thursday for Thanksgiving holiday. Asian markets are lower in early trade as the street digests a raft of economic data, including Tokyo's inflation print and Singapore's GDP. The SGX Nifty, meanwhile, indicates a lower start for our own market. Oil prices remain volatile even as they approach their two-month lows as the market assesses now how the proposed cut on or cap on Russian crude will impact supply. Brent slips still trading around $85 a barrel mark. The Rural Development Ministry seeks an additional 25,000 crore rupees for India's massive rural job scheme in the current financial year. The government is likely to approve 16,000 crore rupees for FY23. The fresh funding, if approved, will be in addition to the 73,000 crores allocated in the union budget for FY23. And ahead of the budget on the 1st of February, exporters urge the government to extend the tax stops, fiscal and job support, propose a development fund, tax breaks to market exports, and seek restoration of the interest equalization levy. Tracking globally, but let's now talk about the cues that you should watch as we get into this fresh trading session. We have our research team here with the trade setup. Ekta, Nigel and Varishta all join me now. Guys, a very good morning to all of you. And Ekta, let me come across to you first. We definitely got a very good close yesterday. How's it looking this morning?
Well, yes, yesterday the sentiment was definitely on the positive side. We had the Sensex, which hit a record high. The Nifty bank closed above 43,000. After hitting a live high intraday, and the Nifty posted a record close. So really a lot of records were broken yesterday. The global momentum is intact as the US Fed is looking to slow the pace of rate hikes. That's what the minutes indicated. And the FII's net bought around 1,231 odd crores. This is after 6 to 7 consecutive sessions of selling. So that was definitely a positive. And DII's net sold around 235 odd crores. Now the Nifty is around 120 points away from its live high. So the market momentum, it seems to be intact, but let's see once there is a full amount of participation which comes in from the US, considering that the US markets were closed for Thanksgiving. It will only be open till 1 p.m. this afternoon on Friday. So maybe that momentum would probably take a little longer. Maybe the momentum in terms of FII flows would need to be seen once the US markets come back in full swing. Europe, however, closed higher on optimism from the Fed, plus you did indicate there was some data from Europe. Asia is largely sluggish this morning, probably because of the China COVID-19 cases. Brent crude continues to be at multi-month lows, so that's definitely a positive. So overall, this is the setup. Lower participation, but it seems as though the larger momentum of a slower rate hike from the US is probably going to keep our momentum intact for our markets.
All right, Ekta, thanks a lot for taking us through all of those cues. It looks like we might get a slightly lower start, but let's see how the trading session pans out from there. And we're also going to talk about all of the individual stocks that you should have on your radar today. So Varishta has that entire list. Good morning, Varishta.
Good morning, Pavitra. Let me start with Lupin, wherein the US FDA has issued Form 483 with 8 observations for the drug product facility and API facility in Mandideep. Moving on to Punjab National Bank, wherein the bank has received the approval from DIPAM for divestment of stake in UTI Asset Management Company in either single or in multiple tranches, and PNB currently holds 15.2% stake in UTI AMC, and the objective is to realize a gain on their investments. Next is Tube Investments of India, which will be picking up 50% stake in X2 Fuels and Energy, which is a startup company engaged in developing processes to convert waste to liquid or solid fuels for approximately 6-7 crores. Lotus Labs has entered into share subscription agreement with and the shareholders agreement with Athen Energy India for buying 26% stake in Athen Energy India, which will enable the company to consume 100% of the solar energy to be supplied by Athen Energy India from their 10 megawatt solar energy plant. And the last is KIOCL, wherein the operations of the pellet plant at Mangalore have restarted yesterday. Back to you.
All right, Varishta, thanks a lot for that entire list of stocks. We're going to keep these on our radar in today's session. But finally, let's talk about the cues from the futures and options space. Nigel, it might be the end of the week, but it is a brand new start of a new session.
Well, that's right. It's a new session. It's a new series as well, and all-time highs on our radar. But yesterday, what a fantastic close we had to trade. The Nifty moved up. We ended at the high point of the day. The bears got caught on the wrong side. And in the final hour of trade, once we crossed that 18,430 odd mark, well, it was the bulls all the way. In fact, the final tick was around 18,520, but because of averaging, it ended a little below that. The good point was the FIs, well, the flows were back yesterday. They pumped in more than 1,200 crores, and this was after a 4-day break. And look at the data together. The institutions were net buyers. The last 4 sessions, they were net sellers. So the money was back from the institution front. Well, in terms of the FIs at the start of a series, this series, it's a contrary to what they did at the start of the October series, because that time they were net short big time. Just take a look at the long positioning. That's the longs minus shorts, close to around 90,000 contracts on the long side. Now, if you look at the positioning and if you want to see the returns, well, it's interesting to see what happens in December, but you can't really derive anything because at the start of October, they were heavily net short, well, and you got some good returns. And last month, well, they were heavily net long, but still we got some good returns. The problem is this time around, they're even more net long. So interesting to see how this plays out. But nonetheless, put writing continues. 18,400 put, 18,300 put. Between them, close to around 80 lakh shares were added. And that's where the bulk of the open risk is as well. So make trend your friend, and the trend is upward right now. So, you need to stay long on the index. You could get a bit of a pullback of around 100, 200 points out, but that's par for the course. The support zone comes up for you on the screen, 18,250 to around 18,300, just going by the options data. And the Nifty is looking good, and everyone's celebrating that. But the mid-cap index needs to catch up. And the last 1 month or so, the mid-cap index has been lagging what the Nifty has been doing. So you'd like to see a bit of a catch-up, but otherwise, things are looking pretty good. Back to you.
All right, make the trend your friend. Nigel, I like that. Guys, thanks a lot for joining us and prepping us up for this trading session. With that, it's time for our first short break on the show. But when we come back, the Rural Development Ministry seeks an additional 25,000 crore rupees for the Rural Employment Guarantee Scheme. We'll bring you more details in just a bit. Welcome back. You're still tuned into Power Breakfast on CNBC-TV18, and an important story now. The centre is planning to increase its budget for the MGNREGS, its flagship rural employment scheme, in the current financial year. Sapna Das joins us now. Sapna, what are you picking up?
Well, definitely Manrega budget in the current financial year too will be stepped up, and this is almost a kind of a regular practice. This is a very important flagship scheme of the government, core of the core schemes. Right on top of the list of the core schemes is Manrega, and almost every year, they ask for additional money. And this time we are given to understand that probably 16,000 crores worth of additional funding is being provided to Manrega. Probably this will find a mention in the first supplementary demands for grants, which will come up in the coming winter session of Parliament. Although a higher allocation, a higher additionality has been sought of around 25,000 crores, remains to be seen whether this money will also come through, by the time the revised estimates are presented along with the budget on 1st Feb. But as of now, we are given to understand that the Manrega budget will go up by 16,000 crores, and that brings you to around 99 to 98,000 crores worth of Manrega budget, which is almost on the same lines as last year's revised estimates. This is a flagship scheme of the government, and they are not going to go back on the fact that there should not be enough funds available, or the funds will not come through. That they will make sure that whatever is essential for the scheme will be given.
All right, Sapna, thanks a lot for bringing us all of those details. But with that, let's bring you some opinion now. Former SEBI Chairman M. Damodaran has hinted at potential changes to law to help attract more investment into India from private equity and venture capital firms. M. Damodaran is heading a committee that will be looking into recommendations to the government on shoring up investments into startups. So speaking to my colleague Parikshit, M. Damodaran said that the panel's report will be ready by the 9th of December. Listen in.
I think certainly you got to look at all the existing regulations and laws and see whether there are any among them that are past their sell-by date, have lost relevance, because you write laws and regulations in a context. Has the context changed? And of course, at the back of all of this, we got to keep in mind the fact that India needs to see a lot of investment coming from outside of India. So how are you going to make it a little easier? That's exactly what we are addressing.
Right. What do you think the budget can do to give a further impetus to startups in the country, make sure we get more private equity, venture capital investments?
I think if there are any decisions that are going to be taken, whether based on our report or otherwise, that can signal to the potential investors that this is an easier place to invest, then you will see more investment coming in. But what are the one or two things? Well, I think the committee will come out with some in the report.
All right, that is M. Damodaran talking about how we can scale up investments into India. But with that, it's time for a short break on this show. A quick programming note as we do that. In just a few hours from now, CNBC TV18 is all set to lead charge with a one-of-a-kind mega initiative. Future Female Forward, the Women's Collective presented by HSBC, catch the on-ground event in the presence of Shireen Van, Managing Editor at CNBC TV18, Hitendra Dave of HSBC, and several other women leaders of India Inc. Live this evening at 5:30 p.m. onwards, also in attendance will be some of the most influential voices from the business, entrepreneurship, and entertainment spaces. So don't forget to tune in to CNBC TV18 today at 5:30 p.m. Welcome back. You're still tuned into Power Breakfast on CNBC TV18. As promised, let's talk about the commodity space. Manisha Gupta joins us with an update. Manisha, it's a lot about oil today as well.
Oh, it is. And, being the last day of the week, we are headed for a weekly decline of around 7% for both the crude oil varieties. We have seen higher U.S. gasoline inventory build-up, and that's weighing onto the market. Also, the European Union governments will resume talks on Russia price cap today, so that development is something markets will watch out for. And then the China city is imposing curbs to rein in COVID cases is something that the markets were already looking at. In addition to the weakening demand in China, continues to weigh onto the crude oil prices. Some consolidation in the Asian markets right now, but then these are lower volumes and the market's still pushed or bending towards the lower side here. While the crude prices may see some pressure, the metal prices have continued to gain up. You have iron ore prices trading at an 8-week highs. Steel is trading at a 1-month high. Copper prices have surged back as well. There are various statements from Trafigura and Goldman Sachs suggesting that by the second quarter of 2023, you will see strong demand coming back. And the metals is not just about China now, because the EV and the infrastructure demand in European Union and US also are now adding to steel demand, the metals demand, and that would be a supportive factor. So some accumulation continues in case of metals today.
All right.